What's going on, guys, and welcome back to another video. So in today's video we're going to look into my biggest pie at the moment in my trading 212 portfolio, which is the technology pie. I currently have 4 companies making up this pie, and we will look into each of these in detail in today's video. But as always, before we get into the video, if you're new around here, please consider smashing that subscribe button, as we're currently on 315 subscribers and our next target is to get to 350. So with all that being said, let's dive right into my trading 212 portfolio. So here we are on my trading 212 portfolio, and if we scroll down here on the left, down to the technology pie, we will see that we currently have 4 holdings in this pie, which adds up to a total of over €1,062. We are currently up €62.77 or 6.28%. The 4 companies that we will be discussing in the video today are also the 4 companies in my portfolio pie, in the form of Microsoft, which is currently up 4.58%, Amazon, which is up 5.66%, Apple, which is up 7.26%, and Alphabet Class A, or Google, which is currently up 7.63%. We have 25% of the overall allocated funds into each of the 4 of these companies. The first company up in today's video is Amazon, which is an American multinational tech company based in Washington, which focuses on e-com, cloud computing, digital streaming, and artificial intelligence. Amazon is traded on the Nasdaq and has ticker symbol AMZN. At the time of recording, their share price was at $3,217. And obviously, majority of people don't have over $3,000 to spend on one individual share, but one of the benefits of using Trading 212 as your broker is that you can buy fractional shares. So for example, you could buy 1/10 of an Amazon share and it will cost you €321, or you could buy 1/20th of a share, so on and so forth. So it's quite handy having Trading 212 as your broker for buying fractional shares for the average investor. On the company's 1-year chart on Yahoo Finance, we can see over the last year they have done exceptionally well. By this time last year, they were at about $1,760 a share, and since then, even the crash in March didn't really affect them that much as such, and they have skyrocketed up to current prices of over $3,200 a share. Amazon's top 3 institutional holders are Vanguard Group with a 6.58% holding, BlackRock with 5.57%, and State Street with 3.26%. We can also see various news articles stating that a lot of top institutional investors believe that Amazon stock is still undervalued at its current price, and that the potential it has over the long term is quite substantial in terms of its current NAV. The second company up on today's list is another very exciting company with a lot more potential, in the form of Apple, which is an American multinational tech company headquartered in California that designs, develops, and sells consumer electronics, computer software, and online services. Apple is traded on the Nasdaq and has ticker symbol AAPL, and at time of recording, its current share price was $117.51. Apple is one of the few tech companies that pay a dividend, albeit quite a small one, as they're more focused on growing their overall share price in terms of paying out a dividend. So the current payout is 0.71%, or about 82 cents per share. And next, if we scroll into their charts, we can see on the 1 year that they've been doing quite impressive since their 4-to-1 stock split a few months back. And about a year ago, their share price was sitting at about $60. And since the crash in March, it has done quite well, and it is now up to just under $118 a share, which is quite an impressive turnaround from its lows in March of, let's say, about $56. So definitely a company to look out for the future, and has so much upward potential in the long term. In terms of Apple's top 3 institutional holders, we have Vanguard Group again with 7.69% holding, BlackRock with 6.44%, and Berkshire Hathaway with 5.73%. The third company on today's list is Microsoft, which is an American multinational tech company headquartered in Washington that it develops, manufactures, licenses, supports, and sells computer software, consumer electronics, personal computers, and related services. Microsoft is traded on the Nasdaq and has ticker symbol MSFT. At time of recording, its current share price was $214.65. The company pays an annual dividend which is paid out quarterly at 1.05% or roughly $2.24 per share. We can see on Yahoo Finance on their 1-year chart that they have had quite an impressive run in terms of the last year, even after the crash in March. So this time last year, their share price was roughly about $136. It rose up to, let's say, just under $190 and crashed down to about $135 again. But since then, it has went from about $135 up to over $215 over the past few months, which is quite an impressive growth for this tech company. Microsoft, like Amazon, has the exact same top 3 institutional holders in the form of Vanguard, BlackRock, and State Street Corporation. And the 4th company on the list, and one of my favorite tech companies, would be Alphabet or Google. So Alphabet is an American multinational conglomerate headquartered in California. It was created through a restructuring of Google in October 2015 and became the parent company of Google and several former Google subsidiaries. So Alphabet has ticker symbol GOOG and is traded on the Nasdaq, and at time of recording, its current share price is $1,555. And again, if you use such brokers as Trading212, you can buy fractional shares. So let's say if you wanted to have your own tech portfolio pie, obviously if you had to buy a full share of each of the 4 of these companies, it would cost you about $5,000. Whereas if you only had, let's say, $1,000 at your disposal, you can buy fractional shares. So you'll be able to invest in all 4 companies to help diversify your tech portfolio. So we can see from Alphabet's 1-year chart that since this time last year, they were sitting at about $1,242 a share. And like the vast majority of companies, they've had a massive nosedive in the middle of March due to the pandemic, and we're sitting at just over $1,055. But since then, they've made quite impressive growth over the last few months and are currently sitting at just under $1,560 a share. And again, all 4 companies that I mentioned in today's video are definitely strongholds in the tech sector, and Google or Alphabet is no different. Really, when you think about companies such as Google, they have the vast majority of the internet search engines, which certainly is a massive stronghold in terms of tech. So with all that being said, that brings the end to today's video. We discussed the 4 companies in my tech sector pie, which were Microsoft, Amazon, Apple, and Alphabet Class A. Our current overall value again was just over €1,060, and we were up 6.29% overall, so I'm quite happy about that. If you found this video anyway helpful, it'd be great if you could smash that like button, and if you're new around here, it'd be brilliant if you could subscribe to the channel, as it would really help me out in the long term. And also, more importantly, if you have any companies in the tech sector that you believe should be in my portfolio pie, please mention in the comment section below with your reasoning behind this. And also, any of the 4 companies that I actually have in my portfolio tech pie, if you think I should have omitted them, please comment below as well with your reasons, and I'll be sure to come back to you. So thanks very much guys, and I'll see you in tomorrow's video.